Material cost in first part we have completed EOQ, material levels to be maintained and all. In this class we'll start with selection of supplier, pricing of material issues and all, right? Yes. Now, already we have completed EOQ and material levels. Rest of the things are going to be studied here. Okay. Let me brief the theoretical background of pricing of material issues so that you will be able to understand the rest. In a factory, various departments may exist. Probably HR department, stores department, stores, okay, and production department, production planning department, showroom, and accounting department and all, finance and accounting. Okay, you just imagine these are the basic departments existing. Whenever a customer approaches to the showroom, and usually in case of furnitures for colleges, schools and institutions, right, they need to purchase in bulk. So definitely it's not available there. Even if you want to purchase a furniture, a cot and a shelf and whatever it may be, if you go to furniture mart, all the things displayed there, you cannot purchase. Only 30%, 40% may be immediately sold out. Rest, they'll say these things are display pieces are order and we'll deliver from our godown. If you are having the bulk purchases, they will take this order to be manufactured and supplied later on. That's how it's happening. If customer approaches, n number of customers may come. Suppose customer A approaches, okay, and showroom will accept what's your requirements are. We need to manufacture 10 sets of tables and chairs. So then this showroom will take this order and stating this as table and chair 100. That's how the code name may be given. If you go to the tailoring shop by giving the cloth to be stitched, whatever the garments you want, they will give a job number, right? So similarly, a job number is given. It's a job for them. TC 100 is a job number. As for the TCM 100, they need to manufacture tables and chairs. How many pieces? 100 pieces. Immediately, this will be intimated to the production planning department. Production planning department immediately drafts BOM and other things, right? Bill of material, BOM is called bill of material. So as per the bill of material, how many units of different category, probably in the case of table and chair, may be made up of semi steel and semi plastic form, both. Then production planning department will estimate what is the requirement in form of steel as well as in the probably plastics. And this production planning department gives the authorization to the production department in charge to procure whenever they are in need. Okay, authorization is given. Whenever the production department is required for those material, sends the requisition slips to the stores department. This is called requisition slip. While sending the requisition slip, the production department head should quote why this material is required with a job number TC100. Okay. Then stores department will supply the goods stating that TC100. For TC100, this much of material supplied. But stores department should maintain the records, right? So for that, The store's in charge, storekeeper, will prepare a document that is called bin card. That is called bin card. Clear? Bin card. Bin is what? What is called bin? Hmm? What is called bin? Huh? It's a box. You know dustbin, but you don't know bin. Huh? So if in the bin, if you put the dust, then it's called dustbin. Otherwise, it's only bin. So storage compartments. What they have in that is recorded in the bin card. While recording the items available here, they will prepare this way. Okay. Receipts, issues, and balance stock they have. Balance stocks they have. And above that, in that bin card, you know, in the bin card, I'll write that here. Bin card. Okay. Receipts, issues, and balance. First, they already have 200 units. There is an issue related to TC 100. They quote the job for what it is issued. Description. Okay. Description. Here, 150 units issued. Then the quantity available in godown decreases to 50. And in bin card, you know, in the top, details required to be maintained are followed by the storekeeper is available like what? Probably economic ordering quantity, minimum level, maximum level, reorder level, and average level, and danger level. All these things are printed here itself. You might have studied the EOQ and you might have studied the other levels also. In EOQ, it is stated that 500. In reorder level, it is stated to be 100. What does it mean? Whenever the stock balance touches or goes below than the reorder level, it's a time to go for ordering. The process of ordering the raw materials will be carried over. So the moment it touches to 50, immediately stores department sends the requisition to purchase immediately without delay. To whom? Purchase department. Purchase department. So storekeeper will send what? Purchase requisition to the purchase department. Purchase department then gets the quotation from various suppliers. Supplier X, supplier Y, supplier Z to purchase 500 units. Right. They will give the quotations here. Okay. Various quotation may be available. X says I can supply it for 10 rupees. Y says I can supply it for 9. Z demands 12 rupees per unit. So naturally, purchase department, based on the quotation, they will place the order to the person who quotes lesser. So naturally, Y will be the chosen one. But from the past year's record, Y's raw material seems to be substandard and lots of damages happening. Then reliably, X seems to be better. Immediately, X finalizes and releases the purchase order to him. Releases the purchase order. This is called purchase order. Once purchase order is, here you have to understand, purchase requisition is raised by the storekeeper, signed by storekeeper, purchase order by the purchase department. All this process will take around 5 days or 10 days. So reorder level will be equal to the quantity required to maintain during the period, required to consume during the means ordering period, the processing time. The processing time may be 10 days, but the 10 days raw materials may be already kept in the store godown. Once it is ordered, storekeeper X, you know, confirms the delivery. Delivery will be done to stores. Bill will be sent to accounts department. Invoice sent to accounts department. Hope you will be now able to understand the difference between physical delivery and invoice. what happens in your home? Gas cylinder order and gas cylinder delivered. The moment gas cylinder delivered, it comes and kept in the kitchen. But what about the payment? They have to come out and right. It will not be paid there itself. So in kitchen, if you had a maid to prepare your food and all, maid doesn't know what is the price at which it is purchased. Not required. Need the stove means gas cylinder. Similarly, stores department in charge will never bother about the what price he's spent for purchasing this. But accounts department is very important. Okay, they have to pay this. No, they want to cross verify the price is correct. Now, this purchase requisition copy will be intimated to the accounts department. Once the goods are delivered, stores department intimates to the accounts department stating that the goods received, sir. That is called GR, goods received note, and immediately it is written here GR and goods received note. How many units? 500 units. So already we have the balance 50, another 500, so it becomes 550. Is that clear? Now accounts department has two items, two documents. One is what? Purchase order. Another one is GRN. Another one is invoice. Three documents. What is a purchase order? Purchase department will place supply me 500 units as per your quoted price of rupees 10. What about the GRN? The report given by the stores in charge that we received 500 units. He never states about the price. Okay, so price is available in the purchase order, and in GRN only goods are actually physically delivered. He cross verifies. Okay, and in invoice 500 units at rupees 10. So now he verifies all these things, and if it is confirmed, then accounts department releases the payment. Accounts department releases the payment. Is that clear? Payment list. If invoice states for 550, then he raises the query. Or if the goods received note shows only 450 units, immediately accounts department cross verifies, sir, there is a invoice for 500 units, but my staff says only 450. 50 units shortage, sir. I packed and sent 450. 50 1 or 2 days you will get it. Can I delay the payment? Yes, of course. You can delay the payment also. Once all the material received, you can settle the money, right? Otherwise, no, sir, you will finish your paying for only 450 now. So I will revise the invoice and send the fresh invoice for 450. That's how the negotiation will be done. Monitoring will be there in order to avoid the discrepancies and cheating and all. Again, this accounts department's production department receives the goods for J500, another goods, another item. So for that, another 100 units they need, so 450. Again, TC 100, 150 units purchased, then the stock decreases to 300. So production department, as per the power given by the production planning department, they will purchase the material or get the material from the stores department whenever they are in need with the requisition slip. Requisition slip. Stores department in charge always delivers the goods as per the requisition slip, stating for which job it is delivered, and tracks all the stocks available in the godown and cross verifies this now and then. So he cross verifies this and intimates whenever the stock reaches to the reorder level to the purchase department to procure fresh. So all these things are available here. Clear? Finally, the job is over. So production department confirms the product is completed and it is delivered to A. As the goods delivered, then not what happens then? We have to prepare invoice to recover the amount from A. How the invoice is prepared? To prepare the invoice, accounts department's role is, first of all, they have to prepare stores ledger control account. Stores ledger control or stores ledger account. Is that okay? Now, in stores ledger account, what are the things are recorded? Similar to bin card, but bin card has no price value. So he is now adding that price for that. C. Initial balance, receipts, issue, balance. Initially, what balance we have? 200 units. Not only that, the price will also be included there. Assume the opening stock 200 units purchased at rupees 9, 1800. Again, there is an issue for TC 100. TC 100, 150 units. Currently, 9 rupees is the price they have. So 9 into 1000, 150. What is the value? 150 into 9, 1350. Closing stock being only 50 units at rupees 9, 450. Again, there's a goods received, GRN. GRN, 500 units. What is the price? From the invoice, he can finalize the price. So 5000 rupees now in closing. 50 stocks at rupees 9 they have. Another 500 units purchased at rupees 10, so 5000 rupees. These are the two varieties of goods they have. Again, they are issuing for J500, 100 units. Now, what value will be taken? 9 or 10. So then this one comes, FIFO or LIFO method will come, or weighted average method will come. First in, first out, or last in, first out. If I assume last in, first out, last price will be fixed for the first issued item. First issued item being 100, the price fixed for this is 10, so 1000. What is the closing stock now we have? 50 units at rupees 9 remains with us. Another, in that 510 rupees worth stock, already we issued 100, so we have only 400 units at rupees 10, 4000 rupees. Again, TC 100, TC 100, okay. For TC 100, again 150 units are issued. As we follow the LIFO method, the latest price is 10 will be taken here, 1500. So finally, 50 items at the rate of rupees 9 exist, and in that 400, 150 is issued. So 250 at the rate of rupees 10, 2500 we have. Now, cost sheet is going to be prepared. Cost sheet. While preparing the cost sheet for what? TC 100 job. TC 100. To recover the amount from A, direct material. For direct material for TC 100, he just sums up the cost allocated for the TC 100 here. How much is that? 2850. Direct labor. We'll get the direct labor from the HR department. We'll study in employee cost. In that chapter, you'll study. Then you'll get the prime cost. What about the factory overhead and admin overhead? Certain percentage on direct labor, or certain percentage on direct material, or certain percentage on prime cost, based on the most suitable method they will identify. We'll study that in the overhead chapter. This you will study in overhead chapter. So then you will finally find out the sale price. That's how the sales price is arrived to collect the money from A. Hope you will be now able to understand the logics here. Of course, this theory will help you to solve one-word questions at least, because once it was asked in examination, okay, store purchase requisition is signed, the purchase order is signed by the purchasing department, storekeeper. Purchase order is signed by the purchase department in charge. Only purchase requisition is signed by the storekeeper. Okay, such a question may be asked in the examination, and this theoretical background will give the clarity about the pricing of material issue. So we are talking about the pricing of material issue. The FIFO and LIFO are called pricing of material issue. It is not real movement. What is the real movement? Goods may move as per the storekeeper's conveniency. He never bothers about the price of the goods. Right. For example, a contractor purchases the cement and stores, and whenever cement required, he just sends the cement from his store. He purchases a cement for rupees 500. Sometimes later it's 540. Sometimes later it's 580. In the storeroom, he has all the varieties of cements purchased for 500, 530, 580, whatever it may be. But will he be able to find out the price? He doesn't know, because price is not tagged in this stock here. When he wants to issue the material, cement, whatever the cement conveniently available in the front, he delivers. He will not go and take the first purchased cement to be sold, right? That's a logic. That's a logic. So movement of the stock will be the convenience of, as per the convenience of the storekeeper, but pricing will be totally different. Pricing will be totally different. The pricing may be FIFO or LIFO method. or weighted average method or simple average method can be followed. Clear? Hope now you'll be able to understand the theoretical background of this. If you have any doubt, you can ask me. Online students, come on, text me. Now, we'll start with determination of supplier, choosing the supplier, selection of supplier. Okay. A company has the option to procure a particular material from two sources. Source 1 assures that defectives will not be more than 2% of the supplied quantity. Source 1, source 2. Defective percentage 2%. And also he assures that it will not go beyond this. Source 2 does not give any assurance, but on the basis of past experience of supplies received from it, it is observed that the defective percentage is 2.8. But if you are purchasing from S2, he is not guaranteeing. But anyhow, from the past year's experience, we came to know 2.8% may be defective. The material supplied in lots of 1,000 units. You are not going to purchase 100 units. You purchase in a lot size of 1,000. Source 2 supplies the lot at a price which is lower by 100. Now, cost difference. If you purchase from source 2, it is lesser by 100. Otherwise, S1 has 100 rupees extra cost. Otherwise, you can name this being savings. This is your choice. Savings 100 rupees. Because if you are purchasing from S2, the cost you pay is lesser by 100 rupees compared to the price you pay for S1. The defective units of material can be rectified for use at a cost of rupees 5 per unit. Rectification cost. So you have to spend around 5 rupees. How do you calculate this? Okay, into 1,000 units, right? For every unit, we have to spend 5 rupees. 1,000 units were purchased in a lot size. How many units may be defective? 2%. Okay, 20 units may be defective. To rectify, we have to spend around 5 rupees. So 100 rupees we have to spend here. In case of you are purchasing from S2, on the 1,000, 2.8, 28 units may be defective. To rectify that, I have to spend 5 rupees. So 28 into 5, 140. Then what is the net cost? Okay, net cost. 100 rupees cost here. Savings 100 rupees, 140 is cost. So 40 rupees is the net cost. Definitely, you can choose supplier 2 where your benefit is your overall cost being only 40 compared to S1. So you can choose him. Clear? Let's now move on to the pricing of material issues. The following information is extracted from the store's ledger. Opening stock nil and 2 purchases, 2 issues are there. So you have to follow first in first out method, last in first out method, weighted average method and all. Even simple average method also. It's a basic illustration. Let me finish up this faster. Okay. You are going to prepare store's ledger. Store's ledger. Okay. So you know that in store's ledger, what do you do? Under FIFO method, okay, Yes. Under FIFO method, particulars, date particulars, and then receipts, issues, and balance. In receipts, quantity, rate per unit, and total. Issues also quantity, rate per unit, and total. Balance, quantity, rate per unit, and total. Three columns will be there for every item here: receipts, issues, and balances. Initially, we don't have the balance, but we have the purchases. On which date? 1st January, purchases, GRN note, receipts 100 units, price being 1, total 100, balance being 100, 100. Then on 20th Jan, again we purchased 80 units at rupees 2, 160, closing value being, already we have 100 units at rupees 100, 80 units newly purchased for 160. So we have two items here, two different rated items we have. 22nd January, issues happening, 60 units for which? Job W16. As you follow the FIFO method, first value should be added here. So 100. 60 will be issued from the first item. That item cost us rupees 1, so 60. And finally you have 40 rupees, another 80 items at rupees 2, 160. Again you have another issue on 23rd January. Job W17, 60 units. As we follow FIFO method, the first value will be 40 units at rupee 140. Second 20 is issued from the second rate. So here 2 rupees, right? So from here 40. And finally, balance being out of 60, 20 issued, still we have 60 units. 1 rupee item were completely issued, we don't have any balance. So 120 is the final. This is what about the closing stock. Clear? If you go for a LIFO method, last in first out method, how this will appear? How this will appear? Let's see. I may explain. And 1 you have purchases 100 units at rupee 100 rupees, final value also being the same. 20th Jan, again you purchased another 100 units or 80 units, but the value is only 2, 160. Final value being 100 units at rupee 1, not only that, 80 units at rupee 2, we have 160 in total. 160 in total. Then on 22nd January, you issue for job W16. 60 units. As you follow last in first out method, the last price being 2. From that 60 units issued at the rate of rupees 2, 120. Closing stock, you have 100 units at rupee 100 as it is. In this 80, 60 issued, no, so we have only 20 units at rupees 240. Clear? And again, we made one more issue on 23rd Jan, job W17, issue being 60. First you have to issue from here 20 units at rupees 240 rupees. The balance 40 will be issued from the first item, which is 40 rupees. Okay. So in that 140 issued, so we have 60 units at rupee 160. This 20 completely issued. Hope you will be now able to understand FIFO and LIFO method. Now what happens in case of weighted average method? WAM method, weighted average pricing method. Weighted average pricing method. The same way. Okay. Now 1 we purchased how many units? 100 units at rupee 100 rupees receipts. payments, sorry, issues and balance. Whatever the item we purchased in the very first remains as it is, as we don't have any opening balance here. Again on 20th, we have one more purchase being 80 units at rupee 2160. What about the balance? Under weighted average pricing method, quantity added with the quantity, value is added with the value. So 100 plus 80, 180. 100 plus 160, 260. Then what about the price? It gets totally changed. 260 by 180 will be the price. You never bother about the price calculations for every period. And in case of 22nd January, you issue for job W16, 60 units. Now the price being 260, 26 bar 18. Isn't it? 260 by 18. Come on, what is the value you are getting? 1.44. 1.44. Then ultimate value being 86. Final 160 minus units subtracted from the units value subtracted from the total value of issue. So 160 minus 60, 120. 260 minus 86, 174. Hope you will be now able to get this one. Again 23rd January, job W17. How many units? 60 units. 60 units, the same rate, 174 by 120. I think rounding of error leads to the price being 1.45 now, 87. So finally 120 minus 60, 174 minus 87, you get 87. Clear? This is under VAP method. What happens if I follow simple average pricing method? Under simple average pricing method, 1 you have purchases being 100 units at rupees 1 each, 100. Closing being 100 units at rupee 100. Again 20th Jan, you purchased further 80 units at rupees 160. Closing you have 180 units at rupee. We never bother about the rupee here. This value being 100 plus 160, 260. On 23rd January, issue happens, 60 units. What price you have to take? Out of the stock 180, we have two rates item, 1 and 2, right? You have to take the average of the rates applicable here, 1.5, then 90. In that 160, 60 is 180, 60 is subtracted 120, and the balance value being 260 minus 90, 170. So come on, tell me, what are the varieties of rates are there here? 1 and 2. 1 and 2. Is that okay? So 120 definitely apart from here, apart from here. Apart from here means this item's rate is 1, this item's rate is 2. Two different materials prices there in the closing stock. Okay. Now what happens in case of 23rd Jan issue? Another 60. Here in the closing stock we have two different rates, 1 and 2. So you take the average of this, so balance being 90. Now 120 minus 60, 60. Value being 170 minus 90, 80. Now come on, tell me, what are the values of price we have here? Price of the stocks. 60 means only this item could be from here, am I right? This could be completely issued. Then we have only one price. While going for the next issue, you have only one price. 2 divided by 1, 2 will be taken here. So from this it is very clear, whatever the closing stock you have, you know. Now find out what are the different prices comprises in the closing stock. Those different prices added and take the average, that is called simple average pricing method. Clear? Simple average pricing method. Now, come on. What is the interpretation? job W16, job W17, and closing stock. Under FIFO method, amount charged for the job W16 while preparing the cost sheet, material cost. How much you might have charged? 60 rupees. For job 17, you charged how much? 80 rupees. What is the closing stock value? 120 rupees. C, job W16, your friend manufactured. He ordered and got the goods delivered for him. And he recommends you. Then you go and place the order and your order number is W17. Will you be happy or not? Under FIFO method. Your friend got the billing for rupees 60, but you got the billing for 80. Matter of 1 day difference. You'll now start arguing with them. So my friend asked and came and he recommended me to do the job here, but he paid only 60, but you are asking me to pay 80 rupees. It's not seems to be genuine, right? So you'll now argue with them. And this is the drawback. The price may be not same. And closing stock 120, you know. 120 reflects what? 120 reflects what? Huh? 120 reflects current price. The price charged to the product reflects what? Old price. Am I right? If the price is increasing gradually compared to the earlier date and today, products are charged with the old lowest price and closing stock remains with the highest price. Subsequent buyer, if you go for buying again, and definitely what happens, you demand, sir, last time you charged only 60, how can you charge 120? Almost double. That problem will come. This is what about the drawback of FIFO method. If the price is hiking, okay, definitely FIFO is not advisable. If the price is decreasing, then FIFO is advisable. Because the stock what we have will be the latest price is the cheapest one. The stock what we have purchased is the cheapest purchased value, that will keep. The stock we purchased the older by paying higher value is recovered from the customer. Both are same item. This is also same item, that is 1 liter petrol. Okay, I have 2 liters petrol. 1 liter petrol I purchased 2 months ago. By the time per liter is 105. Today it may be 110. Price hiked. While demanding, I ask you to pay 100. See, sir, in the market is only 110. But 105 paid for the old one, no, I can sell at any time. So old pieces are very cheap. Okay, give. You understand? That's how you can manipulate. What method you can use. In case of price decrease, then you can go for FIFO method. Under LIFO method, this one, job W16 charged 120, W17 charged 80, and closing stock recorded at the oldest price. Here, this will be the oldest price, and this will be the current price. Now, what happens? Okay, you purchased and you are billed with 120 and you recommended your friend and he went and purchased for 80 rupees. You will get totally disappointed. I purchased for 120, I recommended my friend and he got a discounted price almost 40. Not genuine like. That's how you will argue. So then LIFO method will be suitable when the price is hiking. As the price is increasing, in this case, the latest higher price can be recovered from the customer. If the customer says, sir, so why do you charge me so much? Go and see, sir, in the market the price is 120 like. So you can very easily, conveniently convince them. So you can follow the LIFO method also. Under what? Weighted average pricing method. These two buyer charge with the same price approximately. And closing stock also be approximately same value. Okay. So it's an average. But in case of simple average pricing method, it will have some trouble rather than weighted average method. If you go for simple average method, you are not giving the importance for the quantity you purchase. So this will be logically not advisable. So the closing stock being 80. So the most suitable method may be WAP, and in case of price hike, you can recommend LIFO method. Hope you will be now able to understand the logic speaking. Now, if it is clear, tell me. We'll move on to the next one. So, in case of LIFO-FIFO method, no, most probably in your examination, question may not be expected, but you may expect the theoretical one-word questions like, okay, at what scenario you can apply the FIFO method and LIFO method, at what rate the closing stock may be charged under LIFO method or FIFO method. All these things are easily addressed by understanding this logic. Now, one second. So earlier I told you in the factory you have stores department, you have production department. Okay. In production department they will produce different varieties of material, X, Y, different jobs parallelly. Whenever the production department is in need of material, they can purchase the material or get the material, stating that stock is for job X or job Y. That's how. Okay. Requisition slip contains this one. This is called item mentioned in requisition slip. And whenever the stock available in stores is decreasing, storekeeper will place a purchase requisition, purchase department will process and finish up purchasing. So supplier sends the material here. This will be recorded with the GRN note. Okay. So in your stores ledger account, receipts will be in GRN. Okay. Receipts, issues, balance, you will record here. Based on requisition slip, you will issue mentioning whether it is for X or Y. Similarly, this will have the impact in the balance. This will be added to the balance, this will be subtracted in the balance. That's how we will be doing, right? Sometimes what happens, the goods purchase seems to be unfit or excess can be returned, similar to sales return. So this will be now considered as issue return to supplier. What value will be taken here? At purchase value, at purchase price. Don't follow the LIFO or FIFO here. At what rate it was purchased while returning, the same value is reversed. Clear? Now, in the production department, the material received seems to be unfit, can be returned. What we can do? This is return to stores. This will be receipts like you record here. At what value? It can be added. The value at which it is originally transferred for the production purpose. The same value will be reversed. So this is number 1, this is number 2. This is purchases, this is sales like or issues like. This is purchase return, this is sales return. I mean, it's issue return like. Very, very important concept is production department got 100 units stating that this 100 units required for product X. Later on, production department came to know it's not fit for X. He has two choices. He can simply return to the stores. Or return to the store, okay. This is the adjustment. Or what is the other choice? He will now cross verify whether this unit can be, this material can be used for some other jobs. Rather than returning to the store, he can simply divert this to Y. Okay. So diverts to Y. This is called transfer. In case of transfer from one job to the another job, okay, from one job to another job, not required to record. This will not be recorded in stores ledger. Then where will I record, sir? While preparing the cost sheet, we'll study that along with the job costing. One of the fantastic illustration. I just had a vision over that idea. This superb illustration linked with this logic. Surprisingly asked in the exams. Carrying 16 marks. Very simple illustration. See what happens while preparing the cost sheet, direct material. Okay. You prepared cost sheet for X and Y. Okay. From the stores ledger account, the direct material issued for X is taken here, issued for Y is taken here. But the material received for X is transferred to Y. What you can do? Subtract here and add here. Is that okay? That's how the cost we added for the X departments, the X products material cost is now subtracted and added to what? Y departments or Y jobs material cost, like that's how we can do the addition. So from this it is very clear, goods received and goods supplied. Received goods unfit can be returned to supplier, say purchase return, and issued material remains unsettled, means unusable, returned to the stores. All these 4 may be recorded, but transfer within the department or within the jobs will not be recorded at all, but it will be adjusted while preparing the final cost sheet. You will study along with the job costing. Job costing. Is that clear? One more thing. While verifying the stock, what you have here, balance. Probably you have 100 units as per your record. This record is not physical verification. You record just like when the movement happens manually. It's only a record, accounting. You purchased 100 units, you keep in godown. Again purchased 150 units, you keep in godown. Now what is the stock you have within godown, inside the godown? 250. Again 40 issued. Then what could be the stock available in the godown? 250 minus 40, 210. Now my question is, will it be really available 210 within the godown or not? So what happens now? You have around 500 rupees in your purse. Got 1000 rupees from your dad, going for a picnic or exhibition, and you calculated the spending comes around rupees 600. Now if I ask you what's the amount you have in your purse, 500 plus 1000, 1500 minus 600, 900. If you count the balance in your purse, it will be only 300 or 400 rupees. Yes or no? Yes or no? How many of you calculated perfectly? Huh? How much cash you have in your purse now? Sir, don't suddenly ask me, sir. Your cash you cannot recollect. No, the same happens here. Physical verification is must. If you go for physical verification, the stock available is usually less than 100, probably 80. What happens to 20? Maybe discrepancies and maybe defective or maybe lost or accident, whatever it may be. That may be subtracted and post that in the issues only 20. Then it becomes 80. This issue is priced like the same FIFO only 4, but this cannot be added to any of the product's cost. How can you record? See, if I issue for job 100, this material cost is now added to the cost sheet of the job 100. But any discrepancies, what happens? Then identify whether the discrepancies is due to the normal reason or abnormal reason. In case of normal reason, this will be added to the overhead, factory overhead like. In case of abnormal, this will be transferable to your P&L account, but as you are studying the costing, it is transferable to the costing P&L account, means should be burned by the owner. If it is a loss, it cannot be recovered from the customer. It should be charged to his own money. So it is debited to his own costing P&L. Is that clear? This is what about the simple background logic of this illustration, right? I think I don't want to solve this illustration, but I may guide. I may just guide. C. Opening balance, issues requisition. I'll pick around a few items here up to 12th. So what happens here? Up to 12th. Receipts, issues and balance. Quantity, rate and rupees. Opening balance, issue requisition. This is falling under requisition slip. Receipts from supplier will be GRN. Issue requisition, returns to B company, B and Co. Maybe purchase return and issue. This is requisition slip. These three are requisition slip. Opening balance, will start with this one. Issue, what method we are going to follow here? FIFO method. Also discuss how to treat the shortage in stock. Is that okay? How to treat the shortage in stock? We'll start with the first one. Issue 8 units. You have only one rate here, so I post that rate here. And this is GRN number 55.75. So now already you have 17, fresh purchases 50. So this will be the item you have on 6th. 7th issue, requisition slip 12 units issued. As you follow FIFO method, the first item going out will be charged with the first rate, and balance being out of 17, 12 is subtracted, 5 is there, and another item purchased at 5.75 also given here. Is that okay? Then what more? Returns B and Co. Purchase return. Purchases will be GRN, return is just reversed. Okay, 10 units. As nothing stated, we assume this rate, okay, probably B and Co. We purchased from B and Co at 5.75. Don't go for the what method? FIFO method. So B and Co. The goods purchased from B and Co is this one. The same rate will be taken here. Okay, same rate will be taken here. Balance you have this one. And issue requisition slip 15 units. In that 15 units, as you follow FIFO method, what you do? First this rate and another 10 may be issued from here. Now this is completely over. Out of 40, 10 is over, balance set is there. Such a way you can record all these things. Okay, you can record. Now this is nothing but return from the department. Issue return. Transfer from job 182 to job 187 using material transfer receipt. This will not appear in the stores ledger. This will not appear in the stores ledger. And this will also be not appearing in the stores ledger. That you have to understand. Finally, stock taking 2 units is there in no shortage. Shortage is treated as issue and price at the FIFO model. As per the FIFO model, first in, first out model. So first rate will be added for this. But okay, shortage is a part of overhead, can be transferable to the overhead if it is being the normal scenario. That's how you can give the view. Only to make you understand, I have given this idea. Beyond that, nothing is required. Beyond this, nothing is required. Clear? Shortage 2 units. As per the FIFO method, first rate is used. And the notations used here: goods received note, requisition slip, material return requisition, material transfer requisition. This material transfer requisition transfer from one job to another is not recorded in stores ledger. Only you have to understand this point. Rest will not be required at all. Now, third question also a discussion illustration. I try to finish up the discussion illustration. Fourth illustration also discussion illustration. Okay. I have to explain the fifth question was asked in the examination. Okay. Fourth question is in your text also available, but fifth illustration very rare but asked in the examination. So I have to solve the fifth one. Rest of the things are very simple. Okay. The main theme that you need to keep in your mind is this one. So I have just given the theoretical background, how to record and what are the things will come here. Yeah. See how the shortage is recorded. In case of normal, if you are identified that shortage is for a specific job, and it will be charged to the job's value, and you recover this from customer, or it is responsible for any certain department like production department, factory, or admin, charged to that department. So otherwise it may be general overhead. But in case of abnormal, beyond the control, you cannot recover this from the customer, so transfer to the costing people. These types of questions are very often expected, and you need to know the logics of this one also for solving this illustration. Now, this question is all about weighted average method. Hope this one you can solve it yourself. So third and fourth you can try it yourself. Second and third. Okay, if you have doubt you can ask me. It's very simple. Fourth question is a discussion illustration. I try to finish up that now. The following transaction in respect of material Y occurred during the 6 months ended. The chief accountant argues that the value of closing stock remained the same no matter which method of pricing of material issue is used. See, as already we discussed, no, if you follow the FIFO method, the closing stock value being the latest one. If you follow the LIFO method, the closing stock will be the oldest method, oldest price. But here, the chief accountant says whatever the method you follow, the closing stock's value is same. And the final question is, do you agree for that? Why do you agree? If it is not so, why not you agree? Detailed stores ledger are not required. You don't need to prepare the stores ledger.